What's going on, guys? This is Aaron from Departures Capital. We're here with Michael Williams, President, CEO, and Director of Vendetta Mining. How are you doing today, Michael?
Hey, good, Aaron. How are you?
I'm great. It's awesome to have you back. So it's been a little while since we chatted about Vendetta. I know you guys have been up to a lot of things. Can you start by giving us an update on the company and everything you've been up to?
Yeah, absolutely. We just finished a financing. We raised 4.7 million with a Singapore-based group called JNY, and they are looking to partner with us primarily on our Pegmont asset, our chief asset in Australia, which is a lead zinc deposit. And they're very keen to see us advance it towards production. And I don't think we're that far away. It's certainly a development story. You know, our previous work, we've taken the deposit originally from 5 million to 14.7 million, and according to our recent PEA, we'd be mining on 10 million tons, with the majority of that being in the open pit category, which is key because it leads to lower operating costs. But in the last 24 months, even though we haven't been putting out a lot of public information because of various reasons, including COVID, and just we haven't been in that good of a base metal market in order to raise the capital needed until now. But we've been doing a lot of engineering work, and I think the work that we're planning on the 2022 season, which should begin in May, will go a long way in confirming the engineering work that we've done internally, so that we'll be able to put it out in a public fashion, and certainly then move towards a pre-feasibility study, hopefully in the not too distant future.
Yeah, no, that's great. And the metal market, I mean, I guess you could say the commodity markets in general are looking a little bit better than they were just a couple of years ago, right? So Singapore JNY Investment has invested $4.7 million into the company, which you just kind of talked about. This represents just under 20% of the issued and outstanding shares, which is quite a bit. So can you tell us a little bit more about that and why that's so exciting for you guys, that investment?
Well, it's good. One of the things that I think, if you read the tea leaves previously in the company, it's safe to say we've been undercapitalized. It's, lead zinc's a bit of a tricky commodity. It comes into vogue from time to time, and it hasn't done so lately. So, the lead zinc companies have been, for want of a better word, a bit moribund. I see that coming back given the increase in the commodity price. But having a partner like that, I think that's what we have as a partnership with JNY. They're looking to advance this project. They're certainly, I don't deem to speak for them formally, but I think one can assume that going down the road, they'd like to maintain their interest. Perhaps they'd even want to increase it. So having a partner like that allows us to sort of plan a little bit more efficiently. I think their interest, it validates what we thought, which is, that we can get this into production by doing further work, primarily going to either feasibility stage or pre-feasibility stage. And in the meantime, we'll do some further work to quantify some of the previous work we've done, which I mentioned before. They're in complete agreement with that. And it's good now to have that partner that we can count on going forward. So you're not always on the proverbial treadmill, so to speak. It looks like we have some wind in our sails on the commodity prices, as you've alluded to. We haven't seen the companies catch up to that, though. It feels like the calm before the storm. These zinc prices and lead prices are really good. If you look at our previous PEA, we were certainly using a lot lower prices, sub 110 for zinc, and I believe 95 for lead. And the commodities are certainly trading at a higher price than that. But the markets, as I always say, they catch up to the fundamentals, and the demand is increasing. Worldwide supply is diminishing, and there haven't been really any new ore bodies discovered. So that bodes well for projects like Pegmont that I think can capitalize on this current cycle. because one of the good things about that ore body, it's in Australia, it's in Queensland, and it's surrounded by infrastructure. And it's certainly a lot easier to get into production in a more timely basis than some of the more remote projects, albeit some have tremendous size, but their timing has to be exact, where I think we've got a little bit of leeway given our infrastructure.
Definitely. Yeah, that was the next thing I was going to talk to you about, was your flagship asset, the Pegmont project, like you said, located in Queensland, Australia. Can you tell us just a little bit more about that jurisdiction, compared to others on a global scale?
Well, Queensland's the #2 mining region after Western Australia. In Australia, it's highly rated. I like to think if you do things properly, permitting is certainly manageable, and I think that's the key word. And in the last 10, 15 years, permitting in mining has taken it's become a lot more difficult. But in Queensland, things do get permitted. It's a pro mining jurisdiction. So from that point of view, we can go to bed at night and not worry about any government interference or issues surrounding things like permitting. So that's a positive there. The key for us, though, and it's always been, this deposit was discovered, in the 70s, but then infrastructure grew up around it in the 80s and 90s and thousands. So it's actually now in an opportune space, given that you've got rail close by. We have got access to ports, smelters, if needed. You're close to the Asian markets by getting it on Tidewater at Townsville, which there's a rail link 20 kilometers away. So your operating cost, I'd like to think, will be, in the lower quartiles compared to some of a lot of lead zinc projects tend to be remote. If you look at the Canadian and some of the ones in Alaska. And one of the things with base metals, it's always your transportation costs and power that largely can dictate whether you're economic or not. We don't have to contend with those. Right now we're looking at a 10-year mine life. With further drilling, hopefully we can extend that out to 15 or 20. And we will have an aggressive drill program in 2022. We'll be doing some work on our open pit areas. We'll be doing some testing with it's called XRT sorting, and it basically separates your waste rock from your ore. It is going to be a key tenet going forward, because if this test work proves positive, and our previous test work, which wasn't obviously as comprehensive, and it was reflected in one of our press releases, turned out exceedingly well. If we can duplicate those results, will further impact the economics of Pegmont, which, if you look at our PEA, were already considered quite good. So I think we can even make them better, making this project more attractive to go into production and easier to finance from that point of view. We'll also be testing a couple of our regional targets, which we've been kind of itching to do for the last couple of years, but now we have the resources to do so. We'll be drilling what we call the Killer Bore Zone, which we picked up from a local company, but it has the highest grade zinc. It's 7 kilometers from Pegmont. It's going to be very interesting to see what's there. They've hit up to, I believe, 15% zinc in previous drill holes. We want to see if we can duplicate that. And then in our Will Zone could be the down dip extension to our Zone 5. So we'll be doing some infill drilling, some metallurgical drilling for the XRT, and also see if we can, in our Burke Hinge Zone, which is a key area, the Bridge Zone, see if we can extend that by doing further drilling. So it's going to be a critical year for the work. Looks like drills will be turning in May. Hopefully, the assay labs are slow. I think that's not just germane to us, that's, for everyone worldwide, but, we should have some drill results out July, August, September, so there'll be a constant news flow, and then we can evaluate them and go from there. But we're keen to see those results. I think, as is the market.
Yeah, there's a lot for you guys this year, so it should be pretty exciting. Now, I just wanted to talk a little bit about lead and zinc because I feel like it's two commodities that don't often receive enough of the spotlight like gold and silver does. Could
Yeah,
you tell
yeah,
us a
sure.
little bit more about those two and why investors should be interested? Because everyone's like they love to talk about precious metals, but let's talk about lead and zinc because that's what you guys are focused on.
Yeah, no, no, fair enough. Well, I'll talk to lead first. Lead gets a bit of a bad rap, given people just assume it's a commodity. Its trading range tends to be below zinc and such, but a lot of the worldwide batteries, even though we're in the age of everyone looking for lithium, lead is still the driving component in the battery industry, and that's not going to change overnight. What you are seeing though, because lead, when it changes form, the oxidizes on surface, can be very toxic, and so you don't mine as a rule oxide lead. You have to be very careful with it. So people are they don't target lead per se, but it's a byproduct in a lot of different lead zinc mines in the world. When people are focused on zinc and silver, it's really a lead mine in a lot of cases, but those are getting to be few and far between. And so there's a supply issue with lead, and the refining costs of lead are in most cases less than zinc. So sometimes you can make more money from it than you can from zinc mining, and we still need it as a critical component within the battery industry. The analog would be the gas industry, oil, where we want to turn into a green environment and everyone eventually has electric cars. But the projections are, and that won't happen really between 2040 and 2050.
Mhm.
Lead is kind of like that. It's not going to go away for a while. Eventually, hopefully it does, but we're not there yet, and it's still a great opportunity to monetize it. Zinc is largely used in the galvanizing industry, which makes steel rust-proof, and it's used in construction, cars. It's we always say it's copper's poor cousin,
Hmm.
but they tend to move in tandem. You'll see copper move, then lead follows. There is a worldwide shortage right now in zinc, and I think ore bodies like Pegmont can help fill that shortage. But given, I keep harkening back to our infrastructure, all things going well, we could capitalize on this cycle for zinc. And I'm already seeing, I'm getting a lot more calls asking us about the ore body from producers, some mid tiers, a lot of companies in China. They're looking for sources of feed, and I believe certainly Pegmont can fill that role.
No, that's great. So, what are some of the major catalysts investors should be looking out for, let's say in the near term?
Well, now that we've closed this financing, one of the key, I'm sort of looking backwards, but we retired some debt that we had on the books that we used to acquire the project, 100% of the project. I think that was an overhang. That was a big catalyst. That's been dealt with. Now you'll see us put the rest of the money into the ground to advance the project towards, the next decision will be, at some point we're going to restate our preliminary economic assessment, which we believe, based on some of the work we've done in-house, could be undervalued. Now, to prove it, we're going to do some work now and a little bit down the road, and then we'll be doing that. That's a key catalyst. But look to the drill results that come out of this program, especially in the two new zones and the bridge zone. They could be critical in expanding the ore body. But and also we're doing, I think it's 4 600-kilogram tests of that XRT sorting. If we duplicate the previous results that we've announced, that'll certainly be significant and will go directly to the bottom line of the project. So news flow over, let's call it June, July, August, maybe into September, and then we'll be making a decision on which direction we go for further economic reporting. So all is good from that point of view. And then I think we'll be coupling it with effectively telling the story through some marketing. We'll be back doing road shows, that type of thing. There's just not a lot of deposits like Pegmont out there in the lead zinc space, and we'll be articulating that to the marketplace.
No, that's great. You got to get the name out there. That's pretty exciting. So where's the best place for investors to find out more information about the company?
It's Vendetta Mining Corp, corp.com.
Awesome, Michael. Thanks so much. And best of luck with everything. We'll have you back on later for more updates.
I appreciate that, Aaron. Have a good day.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.